Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yes, we are in trouble again on the Bitcoin price action. As we can see, we broke initially below this level. We managed to get back above, try to reclaim the midpoint and push on obviously up to the top side of this range. We were unable to do that. We came back down, and yeah, and we have now actually fully broken down through the lower level. So that brings into play obviously our previous low, and we all know that we don't believe in double bottoms. We basically will take this out most likely ultimately and then come down to 16,500 if we do test it again. Obviously flip side, we are just swing failing below to try and get back above here, but I mean, with all the bearishness, everything going on, it is relatively increasingly unlikely. Also, what we have got going on is a pullback in stocks. We pretty much get this, in fact you're on the wrong chart here we go, the pullback in stocks, as we can see here. Yeah, we got up towards this resistance area. The resistance was obviously too much for us to bear, and yeah, we find ourselves fast approaching the support area. So again, critical support, again, double bottoms, more than likely they don't happen. We break through and continue lower. Same with double tops. You don't necessarily double top. Once you get back to that high, you continue onwards and upwards. That's basically why the trend is your friend. So yeah, looking increasingly like we could break down. We obviously know we have the Fed just hell-bent on increasing rates until inflation comes down, even though they admit that they're raising of rates and can't do much about a lot of the big drivers of inflation. But hey, what can they do? They kind of know we're going to be going into recession if we are currently in one. Obviously, they're always kind of labeled in retrospect, but yeah, they know that is happening. So they need to also give themselves some leeway to actually lower rates. So they need to raise these rates pretty quick, which is basically what they are doing. So yeah, it's just pro-cyclical rather than counter-cyclical, which is obviously the counter-cyclical is what you should be doing. You should be raising the rates during good times and then obviously loosen them during bad times. What they did was they loosened them, and obviously just general Fed policy with the QE just doing in inverted commas good times. And then now obviously they're having to backtrack that. I mean, the underlying issue that you guys all need to understand is that if basically the currency fails, which it will if you go into a hyperinflation, that's it, central bankers are done. And like who knows what would happen to them at that point. They may even obviously get dragged out of their fancy buildings and you know, and whatever people might do to them. So ultimately, for the sake of literally their whole system, their currency, their institution, they have to rein inflation, and nothing else really matters to them. They don't, I mean, they are fully actually just telegraphing the fact they want people to lose jobs and have less money, because they want the reverse wealth effect to obviously bring down inflation. So yeah, it's not painting a good picture at all. That's all I'll say. Dollar index, as we can see, putting the squeeze obviously on global liquidity. 10-year though, not looking as good. I mean, it looks like it's sniffing out the fact that the Fed may have to do some stuff real quick, and then obviously rates can then start getting lowered in like a couple of years. I mean, even next year the markets are predicting the end of the rate hikes. So yes, gold struggling, same as obviously all assets. Hey, I've not looked at art for a while. How's Cathie Wood doing? Yeah, Cathie Wood pretty much wrecked, the same as the rest of the market. Oil hanging in there, putting in a bounce, tried to get back above this trend line, rejected back below the support. I personally am expecting this support to break and has come down to test into this level. I think there's a lot of froth, a lot of people positioned in a certain direction, obviously i.e. long in this market, and I do think we need a proper test at some reasonable lows, and I do think 90 to 95 is a reasonable low level to test. Obviously failing that, we've got what I think would be an unreasonably low level, which obviously if we do hit like a market crash and a full-on recession stroke depression, yeah, clearly $60 is in play, a 60 handle is in play. But I think a reasonable pullback is down to here, squeeze a few people out, and then then continue obviously with the structurally bullish upward price action. What else do we want to look at on here? What else do we want to look at? Oh yeah, Ethereum. Forgot about good old Ethereum. Ethereum was looking like it was trying to make a play for above this resistance. Did get above and then wasn't able to maintain. So it is again still trending down along with obviously everything else, the rest of the market. That's obviously Satoshi pairing, so obviously trending down against Bitcoin. And the USD pairing, as you can see, particularly bearish, sat well, obviously on this chart you can see sat relatively at its lows. I know it's not quite at this wick low with the 800 handle, but yeah, I mean, we're relatively towards these lows, aren't we? So yeah, not looking good there either. Bitcoin dominance though, not looking too bad. Did break this resistance, support, supported at the next level, pretty much of support. Will it come back to SS and turn back down? Who knows? The only realistically good thing I think crypto has, obviously, that it's been so wrecked, maybe we do test a bit lower, but crypto seems to be on the leading edge of obviously sell-offs in risk assets, and then obviously the subsequent turnaround in risk assets. So before stock market's bottom, crypto has a chance obviously of having bottomed before and then starting to move upwards. Yes, there is that positive if you want to try and find some positive. Ruble did hit that 19 handle. Yeah, so there you go. Who is winning this? There you go. And obviously Euro Ruble painting a pretty dire picture. Don't forget Europe is having to buy their gas in rubles, and obviously the euro is collapsing against said payment method. So not too ideal there. So yeah, generally speaking, markets pretty much trash looking. I guess selling May and go away was the one. Oh, we're actually on the wrong chart again. I don't know why I've done that. We should have been looking on that one, but hey, just have a quick glance at the mortgage rates. I mean, this doesn't move too often, only daily chart, but yeah, approaching that 6%. I think I remember seeing some stats saying that if you want the same actual mortgage payment based on the fact of I think a couple of years ago, based on the fact mortgage rates are now up here and house prices are higher, you'd have to buy a house that's half the price, 50% cheaper. So you buy a house now for half of the price what it was a couple of years ago. Your mortgage repayments will then basically be up there with what you were paying before. So yes, not good times there. Let's look at stochastics. See how they are looking, because I suspect they're gonna potentially be struggling here. But yeah, let's get the stochastics up again. Obviously 4 hour is relatively low, but I mean it's a short term time frame. We don't really know how much of that we're that interested in it. 10 hour is looking to try and turn back up from a low level. 12 hour though is still diving. Daily was moving up and is looking to turn back over, which wouldn't be a good sign. Even a buy daily from this low level is looking to turn back down again here. 3 day potentially going to turn back up. 5 days still diving. Weekly still diving and pretty low here as well. Pretty low read there. Bi-weekly diving and a pretty low read there also. And monthly still diving. So yes, not the greatest of stochastic reads overall is all I can realistically say there. I don't think many people, I mean, to be honest, depends where you see and where you look. Some people say everyone thinks the bottom's in, some people think people don't. It just depends literally which echo chamber you currently reside in. But yeah, could we have 1650? Could we have a 14,000 bottom? I think this has to be the line in the sand, 14,000, and I do think it is relatively realistic as a bottom. Not saying that we're going to come down here straight away bottom and that be it. Maybe we come down, maybe we do break down to this, bounce up, get rejected at 20k, come down to 16k, bounce around here for a month or so, come down to 14k, wick maybe even below that, come back up and then start to form a base. that sounds like a realistic scenario for a bottom being put in. We just have got more pain in the macro. I mean, the market still isn't probably, equities at least, a lot of risk assets probably still aren't wanting to believe just how aggressive the Fed, it has to get, basically. It just has to get, because like I said, their own survival depends on us on inflation not going into, well, hyperinflation. Their own survival is dependent on it, and like governments are starting to do wild stuff with basically giving people money for fuel and just general inflation checks. I mean, it's ridiculous. So inflation was caused by stimulus, and they're going to give stimulus to fight inflation. I mean, it's straight out of the Weimar Republic playbook, pretty much. So yeah, there you go, guys. Interesting times. So yeah, thank you for listening. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you fine people soon.